The SEC just charged Richard Heart with unregistered security offerings. This includes his 3 projects, Hex, Pulsechain, and PulseX. What does this mean for the future of these coins? Let's break this down in today's video. Welcome back to the Virtual Bacon channel. My name is Dennis. I'm a crypto angel investor for 5 years, and I have invested in over 100 startups. On this channel, I share my insights on the crypto market and investment strategies. As you guys know, I am a Pulsechain holder, and I still hold it in my portfolio right now. I have talked about the Pulsechain ecosystem in my last video. Go check that out if you want more background on the more positive side of Pulsechain. In this video, I will mostly focus on the potential effects of this SEC versus Richard Heart case. We'll break down the 3 charges, some more serious than the others, and in the end, I'll also tell you what I am doing for my Pulsechain trade positions. Okay, let's first get into the specifics of this case. The SEC's main charge against Richard Heart is with its $1 billion unregistered securities offering. Here is the official release. The SEC charged Richard Heart and 3 unincorporated entities that he controls, namely Hex, Pulsechain, and PulseX, with conducting unregistered offerings of crypto asset securities that raised more than $1 billion in crypto assets from investors. They also noted that Richard Heart attempted to evade securities laws by calling on investors to sacrifice instead of invest their crypto assets in exchange for Pulse PLX and PulseX tokens. Honestly, this first charge doesn't seem that significant. The SEC has gone after a ton of large-scale projects for selling unregistered securities through ICOs. Some of the most notable ones are XRP, EOS, Tezos, and Telegram's Stunt. Of course, we have the victory of XRP over the SEC, but this kind of result is quite rare. Usually the cases end up in the SEC's favor. The SEC actually has a 90% win rate when they go after someone this way. However, the crypto ICO projects usually turn out okay. They simply pay back a small amount of the money that they have raised as a fine. For example, EOS raised $4 billion in their ICO, and the parent company Block.one ended up only having to pay back $24 million in the settlement. Tezos is another one that has raised over $1 billion but only had to pay back $25 million in settlement. And in the worst case of Telegram, they had to pay the SEC an $18.5 million fine and had to return the $1.2 billion to all the investors, and they dissolved the Tong currency. However, as you guys know, this actually got resurrected, and Tong coin and the Tong network is live today, trading well. So regardless of the outcome, the unregistered security charges is not that huge a deal. We've seen it before, and I think Hex, Pulse, and Pulsechain will survive this. Now, the second charge is a bit more serious. The SEC alleges Richard Heart for misappropriating millions of dollars of investor funds from the unregistered security offering. Here's what they said. The SEC also charged Heart and Pulsechain with fraud for misappropriating at least $12 million of offering proceeds to purchase luxury goods, including sports cars, watches, and a 555-carat black diamond known as the Enigma. The director of the SEC also said that Heart called on investors to buy crypto asset securities in offerings that he failed to register. He then defrauded those investors by spending some of their crypto assets on exorbitant luxury goods. This is also not news to people in crypto. You have probably seen these clips of Richard Heart flaunting with 100 LV bags as he shops in every store, wiping them out. And you've probably seen him flaunting with luxury cars and being as triggering as possible. It is a kind of marketing in a way that he really wanted to even show his wealth. And we all secretly knew that he got his wealth by selling Pulse, selling Hex, selling PulseX. Yes, $12 million is a lot, but compared to the actual scale of the Hex and Pulse ICOs, which together added up to more than $1 billion, it's not that big of an amount. He can just be fined and pay this back if it really comes down to it. Now, the third charge is a lot more serious. The SEC claims that he committed fraud in connection with the sale of the security. Here are some of the points why they called this a potential fraud. Heart began marketing Hex in 2018, claiming it was the first high-yield blockchain certificate of deposit, and began promoting Hex tokens as an investment designed to make people rich. From at least December 2019 through November 2020, Heart and Hex allegedly offered and sold Hex tokens in an unregistered offering, collecting more than 2.3 million Ethereum. This is the first major problem because Hex was so heavily offered to retail investors and targeted at them with these newspaper ads and posters and car ads and bus ads. Now, why is this promotion potentially a bad idea? On one hand, staking is common practice in crypto. Most projects have staking where you lock up the coins for rewards. The longer you lock, the more rewards you get, and these rewards all come from either token inflation or other people pumping your bags. On the other hand, when you combine the retail marketing of Hex with these targeted ads on buses, on cars, on billboards, and newspaper, and direct mail, and when you combine that with the personality of Richard Heart promising this high return, and the Ponzi-nomics of crypto, and the fact that this coin went up 1,000x, 10,000x, you get a result that is super easy to target from the regulators as a Ponzi scam. It could be really argued that a lot of cryptos are ran this way, but at the surface level, this project looks way too much like a scam, so it's an easy target. Another major charge that the SEC claimed is that Richard Heart used a strategy known as recycling transactions that enabled him to secretly gain control of more Hex tokens. They said that he and his co-conspirators had given the false impression of significant trading volumes and demand for Hex by using their own funds, aka like wash trading and wash investing in the ICO. The SEC estimates up to 97% of the investment volume was Richard Heart himself and his accomplices' funds. This is another problem that I think is pretty serious. So how did this actually work? I wasn't around for the original Hex ICO, but I know that it's very similar to Pulse and PulseX in the way they carry this off. So here is the Pulsechain sacrifice, for example, the ICO. This number you see here, $670 million sacrifice in the Pulsechain token sale, was supposedly coming all from the public. But what you don't see today is that during the sale period, the total sale amount was actually $14 billion that was supposedly sacrificed for Pulsechain. What happened was at the very last day of the ICO sacrifice period, Richard Heart came in and put in, I think, $13 billion worth of Hex in the contract and effectively made him control 90% of the Pulsechain supply. This number was since omitted, but during the actual ICO period, we really didn't know if the amount of volume was coming from other interested investors rather than Richard Heart himself, and he was just giving himself money and pumping up the volume. Especially after he contributed such a large amount of $13 billion at the very end, this whole amount kind of came into question, and to this day, I still don't know how much total volume actually came from real investors. A similar thing happened for the PulseX sacrifice. Again, at the very end, he put in a ton of Hex in the PulseX sacrifice, which made him control majority of the supply. And I believe it was even the same amount of Hex that was first contributed to the Pulsechain sacrifice that was then contributed to the PulseX sacrifice. So for sure, there was reusing of money, and the total sacrifice amount was definitely not all there. And then from what I've heard back in the days of Hex initial token sale, as people contributed the Ethereum, it went into the origin address or the Hex initial ICO address. And because Richard and his entity controlled this total amount of Ethereum deposited, he could then take it out and shuffle it to some other address that people cannot track, and then commit it back into the sale to make it look like a lot more people were interested to buy Hex token with Ethereum. When in reality, he was simply taking the money that was already in the pool, moving it around, and then recommitting that transaction again, like wash trading, but in the end, all the money just goes to him. So this pumped up the ICO volume, and it gave him a lot more Hex tokens. You know what Richard is going to claim? He's going to deny it, and all of the traces cannot be traced back to him, and he's going to say Hex is the best performing asset of the last bull market as it went up 10,000x. This is true, you cannot argue with it. A lot of people got rich from Hex, but a lot of this volume that he used to market to the retail investors definitely came from wash trading and a lot of self-commitment and reusing of funds, recycling of funds in the ICO, which is potentially a big problem. From a crypto perspective, I really could care less. You can do whatever you want. As long as you make the coin pump, I will be happy. But from the regulator's perspective, when you go through recycling of money, recycling of transactions to secretly gain control of more tokens, but then also hiding the paper trail of where the tokens are going. This definitely is a big problem, and I could definitely see this being classified as fraud. It's also important to note that the SEC charges are all civil charges right now. The SEC cannot file criminal charges. So will the DOJ be next in filing criminal charges because there are fraud involved? Notice how in the SEC's press release, they said that there are 3 unincorporated entities that he controls, namely Hex, Pulsechain, and PulseX. And so there are no official entities or foundations behind these 3 token sales, which means Richard Heart himself could be personally liable for these charges. In the process of calling the ICO a sacrifice event and then hiding his connection with the sacrifice address and funds, he really exposes himself personally in hot water. It is clear that this design is not only made to evade the potential security law problems, but also made to hide away the recycling of transactions and the wash trading. At the end of the day, the blockchain is transparent, plus he is undoubtedly the leader and biggest promoter of these projects. If there are any traces which link him to the fundraised money and the wallets, it could be big trouble. Something else that makes me scared is that a lot of people have noted that the SEC doesn't usually tweet and publicize about these charges. They go after a lot of cases, but they only do press release for the ones that they want to show as an example, as a trophy case. And today, the SEC specifically tweeted about this whole case, just like how they tweeted about XRP and Binance. So they are really taking out Richard Heart as an example, and this makes me fear for the future of this whole ecosystem. Now, you also have to consider Richard Heart is not dumb. He most likely would have seen this coming, especially considering that his movie, The Highest of Stakes, is premiering this weekend, which is all about the Hex, Pulsechain, and PulseX, and how it was so controversial. It made a lot of people rich, but so many people also called him a scammer. He might have known about the SEC charges long ago and planned this whole movie stunt around it. But question is, will his ego and emotions get the best of him? In the process of trying to go viral in crypto by being a target of the SEC and provoking everyone, not only in the crypto space, but also the regulators, he might make Hex and Pulse go viral. But will he actually end up living a free man and continue to run this thing? Or is the situation becoming way too hot to handle? I think that is the real question that is getting people scared. Now that Richard's whole legacy and his whole life is on the line, it really is all about him at the highest of stakes. Initially, the highest of stakes was a reference to Hex staking, but now it really is next level. Okay, looking at the price, my bags is down 50%, unfortunately. But luckily, I only put in the usual 5% of my portfolio in this short-term position. I am still holding this position right now, but I'm no longer looking to buy any more Pulse or any of the ecosystem coins in the months to come. Pulsechain has broken below these key support levels that we have been watching in the last video that we mentioned, and that is around 0.00008. Now, this news is still fresh, which means this could end up being a V-shaped reversal. In order for that to happen, we need to see a quick bounce within the first day or two after this collapse, where price needs to quickly bounce above this support level and close above it on a daily time frame. So what that will look like is if price can get above these 2 support levels in the next day or two, this candle will look like a huge wick down, but the candle body would not be closed below the support, which means the support still holds. So the next 2 days will be super crucial for the price of Pulse. If that doesn't happen, this chart will look super ugly as we would have broken the all-time low support and show a new downtrend starting. In that case, I might even exit my current position at the next bounce. Here's a summary of how I feel about this ecosystem right now. I don't think this ecosystem is going to zero. I think the SEC is certainly still overreaching. But I think some of the potential stuff that he did before with the viral marketing, with the recycling of transactions, and the potential fraud charges could really play out. There is too much uncertainty and volatility for my liking. It's totally possible that Hex and Pulse goes viral from the SEC charges and the movie, and even with all the FUD, it could pump if the retail side really comes in and believes in the story. But on the other hand, we're talking about using the regulators as marketing. Richard Heart could really be taken down as an example, and I don't think anyone in crypto should seriously wish that to happen. Perhaps Richard Heart's ego and his emotions is getting the better side of him, and I'm not sure if I still want to follow this stunt at this kind of a level, triggering so much people and directly going head to head against the regulators. And that's why I'm not going to buy any more Pulse or its ecosystem coins, at least until this SEC case clears up a bit more, and at least until this movie release comes out and we see what Richard's real plans are. Okay, that wraps up today's video. If you like this type of content, definitely follow me on Twitter. As I go through the research, I'll just post my unfiltered alpha about these events as they drop, and these are usually too quick for these in-depth videos. Also, check out our free newsletter on virtualbacon.com. Every Monday, we publish a new weekly digest with all the hot topics of the week and our personal investing insights. Remember to subscribe to the channel and leave a comment if you still believe in the Pulsechain ecosystem or not, and let me know how you think this case will play out. Thanks for watching, and I'll see you guys in the next video.